What's up, Chris?
What's going on, Jay? Happy Halloween. I'm wearing the wrong clothes today. I didn't think that all the way through. Should have put the orange shirt on instead of
You
the red.
should have,
Yeah.
yes.
Welcome everyone to On the Rocks, the e-commerce hour. Today we're banging through, or not really. We're gonna talk deeply about episode 2 of our in our cash flow arc. Our The title of this particular episode, or the thing that we're going to talk about most here, is rising costs and shrinking margins. And so, as any e-commerce operator knows, like both those two things that I just mentioned, rising costs, shrinking margins, are both very real and very problematic. And a third thing, they're very much happening right now. So your sales are up, but your profit's down. Your shipping, your ads, your supplier costs, every single thing that you're outlaying is eating your margins alive. If your profit feels smaller than it used to, that's not your imagination. It is very real. And that's what we're going to talk about today. And so one of the things that I want to ask, right, is when was the last time you checked your actual margin per order after fees, ads, and fulfillment? Because if you haven't, today is the time to do it, and today is where we're going to talk about those types of things. Today, specifically, we're diving into why e-commerce margins are getting crushed and what you can actually do to protect them. Because that's our favorite thing to do here on the show, is give you actionable advice that you can take home and put into practice. So before we get into actionable advice, let's talk about this problem. So Jay, I think the thing that we'll talk about first today is the profit squeeze.
For sure.
Which I wish now we've had some ghostly thing or something like the profit poltergeist. Uh, so when we talk about the profit squeeze, right? We've talked about, hey, maybe your volume is going up, maybe you've even raised your prices, but you're getting hit by these additional costs that are what's squeezing that profit, and that can come in lots of different ways. The first one, the one that you see the most frequently, the one that you see the most often, is on the shipping and fulfillment side. So cost of gas is going up, so fuel surcharges are going up. You've got some maybe dimensional weight pricing, so that your products are costing a little bit more to ship. And then of course our folks at Amazon, they know that they want to make some money, and they've started to increase the cost of FBA. And so you're seeing the impacts of FBA fee hikes. Like, these are very real things that happen. They happen all the time, and they definitely can increase your cost situation. The second thing that we talked a little bit about on the last episode, actually, and it's still relevant here, is that your cost per mil, like they're going up across all of your different platforms, right? Your ad spend is getting more expensive, and in fact, Jay, up to 30 to 60% year-over-year increases from last year to this year, and that's across Meta, Google, TikTok, all those guys. Everything is costing more to get views on your product. And so when you're selling direct to consumers, that is really difficult, and that's really challenging. One other thing is, like, you're not the only person who's seeing these fuel surcharges. You're not the only person who's seeing these ad spend related issues. Your suppliers are seeing those too. And so the cost of maybe your raw materials or the good that you're buying, those are starting to increase. The packaging that you're putting it in, that's starting to increase. And the labor force around the world is getting a little bit more expensive. And Jay, that's before we even talk about the thing that we've talked about on this show probably like 100 times, and that's the tariffs that are impacting all of these things as well.
Yeah, the biggest factor that's hitting these items right now, because we
don't
know what they are. We can't predict them because of the changing environments.
Yeah, right, exactly. And so you see, you've got your outbound prices with your shipping are going up, your customer acquisition costs with your ad spend are going up, and your inbound pricing from your suppliers, that's all going up. You just got going up everywhere. And so that type of thing is causing this shrinking profit, despite potentially growing your own product, right? Despite selling more. As there are some external data points that support this too. Shopify merchants' average profit dropped from 20% in 2022 to like 10 to 12% now. Like, that's a pretty big and drastic drop. That's a 10% drop, which is substantial.
Huge. Yeah.
And then, like I mentioned, of course, as ad spend's going up 30 to 60%, your cost per acquisition, that CPA, That's 60% ups in for those direct consumer customers since 2021. So again, you're just seeing the outputs of all of that just be harder and harder and more difficult. So everyone's chasing sales volume, but doing that may be like running faster on a treadmill. It's actually going faster still, right? So even though you're selling more volume, you're just giving back more and more of it because your costs are increasing just as quickly. Now, Jay, that's a cost side. Are there some other cost side implications that you think are worth talking about today?
Well, I think that's where we actually want to keep it right there in that space, because
Yeah.
you look at meta ads, they are up 30 to 40% year over year, and
Yeah.
TikTok is still lower, but they're climbing.
Right.
Sellers are chasing performance, but sales performance doesn't exist anymore. It's just not
Right.
there. So, they need something to work towards. And, you mentioned fulfillment fees, between UPS and FedEx, Amazon shipping, those costs are hitting. The Amazon fulfillment fees are hitting. So you're looking at anywhere from 20 to 30% before you even look at product cost. So your margins are getting eaten away like crazy, and you have to chase those any bits, the 5% shaving off the price from your manufacturer, whatever you can get to help you maintain that margin. And people think that chasing after the sales and building it on volume is going to help, but when with every sale you have shrinking margins, you're just making you're getting lower profits overall. So don't be doing that. And know, like you said, do you know what your product cost is after costs and after freight and ad costs? And if you don't, you're just playing a guessing game. There's no idea.
Right.
So get in the game, know what those costs are, and predict what your average order is, what your profit is after every order, and that way you have your finger on the pulse of that.
That's right. And there's some other, and the reason that I was asking about costs is that there's some others. I mean, you're not getting pressured just on the cost side, because you may have some profit leaks on the sales side too. There are some other hidden killers of margin as well. One of those is a discounting culture, right? We talked about that on the show, right? It was Prime Days a couple months ago. It was Prime Days again last month, or earlier this month. We had Black Friday, Cyber Monday coming up next month. Like, we're just discounting all the time. And so sometimes it is very easy to overuse sales and promos to move your product, right? So you may be getting captured up in all of Amazon's FBA generation here through their Prime every week, or whatever it's going to be,
the
in
Prime du jour.
35, Prime Day every day.
Yeah.
In a few years, but it is very, when you start to see sales volume decrease, you start to get concerned, right? Like that's a very understandable thing, especially when you're sitting on a bunch of inventory. But overusing sales and promos to move your product is probably not the answer. And so you do have to be wary of that. Yeah, go ahead, Jake.
Discounts are like caffeine. They feel really good at the moment, but after a little while, you're going to feel that crash, and it's going to catch up to you.
It's a Snickers bar, man. That was a good Snickers bar joke. A good Halloween joke. It's like that Halloween candy tomorrow afternoon. It's going to hit really nice in the morning.
But the thing is, and you said it there, you're training your customers to wait for a sale.
Right.
And all they're doing is waiting for you to drop your price for those sales periods. Now, if you put that money into ads instead, then you can keep them from waiting for that sale and try to keep those sales moving throughout the year.
Right, or instead acquire new customers too, right? There's a lot of different things that you can do with that money instead.
Exactly. But you just reminded, so quick aside here. I have not had any candy. We've had candy in this house for like 2 months.
Yeah.
And I have not had any in over 2 weeks. And I don't plan on having any tonight, but that Snickers bar sounds so damn good right now.
I know.
Yeah.
I haven't had any candy in over 2 hours. I'm doing great. I have managed to keep my hands out of the candy so far today, but I can't speak for yesterday though. So
Yeah,
the Mars or whoever it is, whoever owns that group now, they're I'm sure they're pretty excited about this week. We'll see how it goes though.
for sure.
Um, one particular problem that Mars doesn't really have to deal with that much, but that e-commerce providers definitely do, and that can definitely kill your margin if you're not keeping track of this or being aware of it, is returns. Right, the reverse logistic costs. So to get that money, to get that returned item back, the restocking fees, like all of these types of costs, they eat your margin really quietly. You don't notice it happen. You just see that sales dollar go back, that refund go back, but you don't really think about the additional costs that go along with this. Um, and especially if it's something that you then need to repackage, like there's just so many different costs that you can incur for returns. It's really important to be aware of those and to understand how that impacts your overall margin.
Yeah, depending on what that product is, you have to repack it, inspect it, see if it's in sellable condition, if you have to donate it or dispose of it or sell it at a deep discount. So any way you look at it, apparel manufacturers are looking at a 25 to 30% additional cost on every return, and you're eating directly into your margins once you're doing that.
Nothing you can do about it. So that actually is one of the things that speaks to some of the things that we've talked about on other shows of how valuable the try on AI might be if it's something like that, or getting those reviews that really tailor in responses to how it fits and all of those kinds of things. So being aware and trying to steer your customers to the right purchase the first time can be really, really powerful.
So important.
The title of the series is all associated with cash flow, and everything that we really talked about so far is this margin and how it's eating into cash flow that way. The next one actually is more of a true like cash flow consideration, and that's overstocking. And there are lots of reasons that can happen, and especially right now, it's very possible that if you were doing some tariff related trickery, like maybe you bought a little extra stock to try to miss the tariffs later, but that cash that gets tied up in that inventory, and especially if you're having some minimum order quantities or something like that, where you get tied up with a lot of slow moving inventory, that can create a huge financing drag because that you've outlaid that cash already, but you're not turning that cash into new cash, and you're not earning those margins that are decreasing anyway. Because you're just sitting on this inventory. And so overstocking, especially of these slow moving products, can be a really, really, really problematic problem. That's pretty obvious, but that can be very, very problematic. And so being aware of your stock levels and understanding when, like Jay talked about, maybe it's time to do a pointed discount on a specific product so that you can move these slow movers rather than just sit on them for a while. Jay, any thoughts on overstocking?
Yeah, a couple of them there actually. So, we deal with sellers with, 6 figures of inventory in that slow moving category. And all that is cash sitting in the warehouse. And
right.
you can't allow that to happen. You got to stay on top of that. And, a lot of people are taking out Shopify loans to cover the expenses because that inventory is sitting there. So it's super important that before you go and make these larger purchases, that you do an analysis. Look at how many days on hand you have of your overall stock, and you could do that on an individual basis for every item and identify those items that are sitting there that are overstocked and make sure that you are not adding to that problem. And right now there's so many AI tools, we use Cin7, and they have Foresight AI that's actually looking at that, and they're telling you which are your cash cow products and what are your loser products, and what you need to do in it. It's like you have 600 days of this product on your stock, and it's just eating away your cash flow, and it's horrible. You got to work that and maintain that stock, and like Chris said, it might be worth it to convert it, and even if you get a lower margin, you convert it, turn it into cash, and use that cash, and you pay down those capital loans, you're going to save on that interest cost. And so you win-win, because now you've cleared out that warehouse space, you brought in cash, and now you've reduced your expenses. So it's win-win-win in that situation.
Yeah, and that's a thing that we've talked about on the show a lot too. Is that one of the keys to being successful, especially right now, is being adaptable. And so you may have bought that inventory with the expectation that you were going to sell it quickly, right? That it was going to be a good product. You created something, maybe it's a tailored version of the thing that you had, and you thought, this is going to be a big winner. We love where this is going to be. You got it in, and it just didn't catch. Being adaptable and being willing to say, oh, you know what, we blew it on that one. Let's move on to the next one can be really important, right? For all of those exact reasons, right? And so that overstocking can be a huge place that erodes your profits through that inventory. Both the like holding costs, so your warehousing costs, and then also on top of that, the financing, like Jay was talking about, Shopify loans or even banknotes if you've got them, right? There could be anything like that. If you're financing stuff that's just sitting there, that's not great.
Yeah, I didn't even think about the warehousing costs. I mean, if that product is sitting at Amazon, you're paying a 30% surcharge for it during the holiday season. You don't need to be sitting there. And if you're on a 3PL, you're paying for that space as well. So, beware of where your product is and what you're paying. So it's really important.
Yep.
Keep that head in the game.
That's right. One other area to keep your head in the game, Jay, is with your subscriptions. If you've got poorly managed bundles, and again, that discount fatigue of like, oh yeah, okay, people are just tired or bored of the discounts, those subscriptions can do the same thing that we've talked about with some of those other areas. And then Jay, the marketplace fees. So we talked a little bit about FBA, but there are also fees associated with just being on the marketplace. So Amazon, Walmart, Etsy, they're all taking bigger cuts now, right? And that's not a profit side thing, but that is a being able, or that's not a revenue side thing, but it is being able to sell your product, and it's just costing more. Those I think Walmart, most of these folks call this commissions, right, of some sort.
Yeah,
you're allowing it.
Yeah, and when you look at your Amazon statement, you have fulfillment costs, you have your warehousing and shipping, which are your fulfillment costs. You have your seller fees, and then you have the adjustments in there. So, by the time you're done, I mean, that's thousands of dollars on there. So, yeah, I mean, you are right. And, you say it's not tied to revenue, but it is, because it's all based off either the goods moving out that you've sold or a percentage of the revenue that you've earned. So, as your sales go up, both of those costs are going to go up regardless.
Yeah, and I was more meaning your cost side stuff.
Yeah,
a lot of these others were revenue side. Well, I guess not really. The overstocking stuff that's cost side stuff too. Yeah. All good. One other thing that can definitely be a place where you lose some profits without really thinking about it is in your merchant processing fees. You really want to be thoughtful about that. I mean, I think the standard across the board these days is 2.93ish. Plus 30 cents per transaction. I mean, I think that's Shopify's basic at this point in time. And that's kind of what you'd expect most of the time, but that is something that you have to consider. You can't just ignore that cost because it is very real. And you're not ever going to see that cash. So it isn't as though that's coming in the door and then you're paying it back out. It doesn't work that way.
Yeah.
They're taking that right off the top. Go ahead, Jake.
So if you're running a real high volume and high sales dollar store, you reach out to Shopify and say, hey, look, I'm pushing $3 million, $5 million, $10 million. I want a lower rate. And they will do it. You just got to stay on top of them and do it. So if you don't ask, you don't get. So make sure you ask. Put the squeeze on them.
Yeah, or they're going to put the squeeze on you, right?
Most definitely.
And there are real world examples everywhere. I think as we were putting together the commentary of this show, we found a direct consumer skincare brand that had Jay $3 million in annual revenue, but they were only netting 4% profit after ads and fulfillment. Like that's just giving it all away. And it's wild. Like a lot of sellers may not even know. Like almost half, I think, Jay, don't even know what their real gross margin is until it's tax time.
Right.
They're just out there flying blind. This is a thing that you definitely want to be on top of, and you want to make sure that that you're being really well aware of.
Yeah.
Jay, when we think about those hidden killers of margin, are there others or additional comments that you want to add today?
No, because I'm not going to cut into what you got for next one. But yeah, I
Okay.
do want to say that everybody thinks it's sexy. I got a I got a 7-figure store. I hit $1
Yeah.
million in sales.
Yeah.
People are constantly talking about it, but you
Yeah.
don't hear anybody say, "Yo, my e-commerce business hit 200K in profit," because it's just that damn hard.
But you certainly don't hear people brag about how they spent $80 to acquire a customer that bought a $60 product, right? Like,
Exactly.
my,
Exactly.
my marketing's so good. I spent $80 to sell a $60 product, right? Like that.
It's like the
You know,
Costco method. We're selling chickens for $5, and we want you to come in and buy that, but you're gonna walk out with $500 worth of other stuff. So that $80 discount or CAC to buy to sell $60. Hopefully, it's got long-term value in there, and that's the play. But up front, it doesn't look pretty.
No, it doesn't.
Yeah,
And
for
and
sure.
again, it's not a thing you're going to hear people brag about,
No,
and sadly, it's probably not a thing that a lot of people even know about. This
true.
is it's one of the hardest things to really put your finger on and get a pulse of, and so it's really important that you're doing the evaluations of that, right? Because if you're spending $80 to sell a $60 product that you give 50% of the costs back to somebody else, you really spent $80 to get $30 of margin, and
Yeah,
that feels even yuckier.
yeah, for sure.
And so then, Jay, of course, as we do on this show all the time, this is my favorite part of the show. It's the "What do you do now?" Your margin rescue playbook. So what we're going to talk about now are a few actionable things. Again, the reason that you come to the e-commerce hour is to get actionable things. These are actionable ways to stabilize or grow your margin. And so we've got 7 of them today. Um, so let's get to it. Number 1, redefine those profit targets. You need to understand and fully be aware of your break-even ROAS and the margin floor that's associated with that. Right? You need to understand at X dollars of spend that I have to generate X dollars of revenue to be able to just get back to where I want to be. Right? And
Yep.
this is that's a critical thing because it helps you to understand both where you should target from an ad spend perspective, but also like what to be looking out for, because that type of information is available basically daily. You know how much you spent on Facebook, on Google, on TikTok every day, and you can see how much you sold there. So this information is pretty available. So make sure that you have a really good understanding of that. Jay, any thoughts about profit targets?
I think it's super important. When we were talking about tariffs and landed costs, it's like,
Yeah.
what is your effective profit margin after the tariffs got calculated in there? And
Right.
I mean, you can immediately see that. And one of the calculations is, what is the impact of that tariff on your profit on that product? And when we put in an actual customer's detail, it was $175,000. So that is not anything to sneeze at. I mean, it's a lot of money. That's almost that
Yeah.
200K that we were talking about.
Yeah.
Yeah.
Yeah, absolutely. It's huge. Jay alluded to the second point earlier, and that's to negotiate supplier terms. So consider whether you can get volume discounts if you buy a certain amount of inventory, especially your fast moving stuff. Consider and have conversations around whether you can enjoy shared freight, or just allow your suppliers to give you a little bit more time, so that slow moving inventory you have an opportunity to turn before you have to cash outlay that inventory cost. Obviously, that's a thing that we've talked about on this show several times, right? There are lots of advantages to being able to say, "Hello, can you make my products cost a little bit less?" And especially right now, as we've talked about on the show before as well, um, suppliers understand that those tariffs are making their products slightly less appealing, and may be more interested in keeping your business than losing it altogether. so they may have a little bit more flexibility with some of these things right now.
Yeah.
And so it's a great time, especially if you're feeling the squeeze here. It's a great time to go back to your suppliers and make sure that you've asked for as much as you can. Jay, any extra thoughts on talking to your suppliers?
Yeah, it's a lot easier to get a 5% discount on your products from your suppliers than it is chasing after the next ad hack to get your cost down on your ads. So do that, because it's going to have a bigger impact, because odds are you are placing a larger order, and you're getting ready to stock for, Black Friday. You got a large order there. 5% will add up, and do that. Now, the other thing I want to say when you're negotiating with your suppliers, and you hit on something earlier. It's like, okay, let's order larger quantities, but I don't want it shipped right away. So if you can commit to a larger quantity, you might have to pay for half of it up front, but they will sit on it and ship it in intervals to you, and then bill you the remainder of it over time. But it won't be taking up all of that warehouse space either. So that will save you in the long run. If you calculate that out, you're probably breaking even on that, but by increasing your order, you're getting that bigger discount on the price. So that's where you're going to win there. So definitely look at that from a supplier standpoint.
Yeah, right. And they're not the only suppliers that you should negotiate with and be cognizant of. Our third option here is to optimize your fulfillment. And that means to have those conversations with your 3PLs. Use those 3PL rate comparisons. Make sure you're getting the right shipping costs. If it means that you need to do a deal with a specific shipper, you can maybe get some better pricing in that kind of situation, right? There are lots of opportunities for those rates to be looked at and reviewed. That also means that you can. We don't really talk about it as a thing you should compare to, but that also means being thoughtful and comparative to Amazon. They're just a 3PL with a really popular name, and they just drop in their product instead of it being a 3PL. They're FBA, right? It's got its own special name, but they are just a 3PL that you're using, and typically for higher volume. And so be cognizant of the cost that you're giving to Amazon as well, so that you can compare how comparable it is and how much you're giving up versus having that marketplace at your disposal. One other thing, and we talked about this a little bit, right, is the idea of consolidating SKUs, right? Make sure that those products that are slow movers or that you thought were going to be great but really ended up just not just taking up inventory space. Maybe it's time to get rid of them. And as Jay mentioned last year, I think this is the right time to do it, right? Everyone's buying stuff Black Friday, Cyber Monday anyway. Might as well get rid of those things that you're not wanting to carry in 2026. It's the time to do it.
Get some influencer marketing going on that and get that stuff moving out the door.
That's right. Yeah, exactly.
But I want to hit up on the 3PL thing you were just talking about there.
Yeah, go ahead. Yeah.
So, a lot of firms will get a 3PL and ship from one location. Yeah. Whether that's East Coast, West Coast, whatever that may be. But it might be more efficient to be stocked in multiple warehouses, strategically positioned, because shipping will be lower. You still have to get the product there. So it's a truckload versus all of the independent boxes going out the door. So you have to weigh that out and see what that cost is. But shipping times are much quicker. And the quicker packages get to customers, the more satisfied they are, because it's a right now, and we've talked about that forever with buy online, pick up in store, BIPUS.
Yeah, sure. Yeah.
And things like that. So take advantage of all of that.
Yeah, absolutely. Super important things, right? One other thing to do with your SKUs, we talked about consolidating, right, and getting rid of those bad ones. But one other thing that you may want to do is just audit them more broadly. Take your bundles and maybe you want to throw those slow movers in a bundle just to get rid of them. Maybe you just want to just drop those products altogether. So you do want to make sure that you're being really thoughtful of your overall product portfolio, so that you can ensure that the ones that you've got, the ones that you that you're using are really really useful for you. That's point number 4. Point number 5 is to really 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 be thoughtful around your ad spend, right? When we've talked about the way that costs are increasing on Meta, on Google, on all these folks, the customer acquisition costs are so high. So it may be time to reevaluate or to reallocate ad spend. It may be more valuable to you to shift from acquisition into retention. So maybe email and SMS is a little bit more powerful for you. It's certainly cheaper. Using user-generated content, like Jay talked about, getting an influencer to help support you to get rid of this slow-moving product, but to get it out the door, that may be more powerful than using paid reach, right? Like it is certainly a thing that you should be evaluating. And so being really thoughtful about how you are using your money and what it's generating is really critical to your longer term success. Jay, any thoughts about ad spend reallocation?
Yeah, I mean, even if you can just move 10% to customer retention, you're ahead of the game at that point, and shift it there, and it keeps clients or customers coming back, and that's what you ultimately want.
Yep. The sixth thing, right, is to review your pricing. We don't talk about that a whole lot here, but it is very true that a lot of folks end up setting a price and forgetting a price, right? If you're not spending the time to understand where you want your target margins to be, and how your pricing is impacting both purchases as well as your performance, it is worth doing that. So you can implement dynamic pricing. And then definitely we want to review at least annual increases. I would probably do that a little bit more frequently if you have the capacity, if you think your customers do. And then of course it's really important to also be aware of what your competitors are doing, because if they're ticking up their prices a little bit, that's a pretty good and clear indicator that it's time for you to do the same. You just don't want to get stuck in the same pricing for forever. Jay, any thoughts about pricing?
Raising prices is scary. Did you raise it too much? Did you leave too much on the table? So you have to do it. It's a gut. And, when we do it as accountants, we know it pretty much immediately. You don't know it immediately when it's retail. You find out it's a lagging indicator at that point. But, most customers aren't going to notice a 3 to 5% increase, but they will notice when your products aren't on the shelves anymore. So, it's worth raising your prices, even 3 to 5%, and get that done.
Yeah, and you do have the opportunity too, if you're doing that dynamic pricing, to move it around a little bit, to move it up a little, move it down, move it around to what to understand what those impacts really are, right? If you're evaluating it maybe in a slower week, maybe the week here after Halloween, 3 weeks before Black Friday, maybe it's a good time to do a dynamic increase just to see what the impact is. So definitely review your pricing, review it frequently, make sure you understand what those impacts are. And then our final step couldn't be more like this show, Jay. You need to calculate your landed costs accurately. Jay obviously
saying it for years.
Yeah, Jay even built a tool to help you do it. The landed cost calculator is one that's out there to help you do that. You want to make sure that you include freight. You want to make sure that you include duties. Don't forget about your packaging, your platform fees. There's lots of costs that go into being able to evaluate the profitability of your products. And that's before we even talk about the big monkey in the room here, right? The tariffs that just keep coming and going and coming and going, and I think they're coming again. Who knows what's going on over there. But before we even talk about that, there are lots of things that you need to evaluate in order to calculate your landed costs accurately. And Jay, I know this is a thing that you're passionate about, so tell me more.
Yeah, you don't fix shrinking margins with more sales. You do it with smarter ones, and you have to pay attention. So that's it. I mean, jump in there. And, when it comes to tariffs and landing cost, you have to know what it is, because, and we've given this example before. You're selling a product, you have a small margin on it because you're just trying to cover your cost, and you forgot that you got shipping cost on that, and that's 15 cents on a 25-cent per item. It's 15 cents a pound on a 25-cent per pound item. That is a lot of money. So pay attention and know what your costs are. And if you don't and you can't, get systems in place that can do it for you. Reach out to us. We can help you with that for sure.
Absolutely.
So, yeah.
Absolutely. And the biggest thing to remember, right, and Jay, you kind of alluded to this as well, right? It's not about selling more. Like it's always the thing, right? 7-figure seller, that's a big deal, right? But it's not really about selling more. It's about keeping more. And the way that you keep more is exactly what we talked about. You make sure that you're aware of those profit targets. You understand the costs of your products, and you negotiate them where you can. You optimize that fulfillment. You audit and make sure you're not selling crap products. You make sure you're spending your money for ads in the right way. You make sure your prices are accurate. And then, of course, it is also important to make sure that you understand fully your costs. And that might be the most important of them all. Which brings us to our final segment here, which is a segment we actually introduced last time, but I didn't really talk about. We're going to call it the CFO lens. And so this is to give you a framework for monitoring the things that we've just talked about here, right? Those KPIs that you need to be really thinking about. Some of these are going to be pretty basic, and some of those are going to be things that you really need to keep an eye on. And so, Jay, I'm going to run them off quickly here, right? It's important to understand your gross margin. Who would have ever imagined? But how can you understand your gross margin if you don't understand your landed costs? So it is important to understand all of the components of what your margin are and understand that they're accurate. It's also important to understand your contribution margin. So how much of that comes back to you? That is a very important thing as well, because gross margin is that product-based thing. The contribution margin takes into account all the other things that we've talked about today. That ad spend, your fulfillment charges, the things of that nature. It is an absolutely critical ratio that you must know, but again, can be very, very difficult to understand sometimes, is your acquisition costs to long-term value ratio. Again, you don't want to be spending $80 to acquire a customer who's going to spend $60 in their life. That is just not good value. And so you want to understand how much are you spending to acquire customers and how long are they going to come back. You also want to understand the correlation between your ROAS and your profit margin, and how those two things work together. Because as you get more return on your ad spend, you may be spending more and losing a little bit of profit, but you may not. But you need to be aware of that. And then, of course, and this is just a calculation that's a part of the puzzle here. You want to understand your landed cost per unit. Right, that's the only way that you can evaluate several of these metrics anyway. So it's really important to understand that. And like Jay mentioned, one of the best things to do for that is to use tools or dashboards that help to do that. You can use tools that exist out in the marketplace for things that we really enjoy, things like Sift or A2X, to Xero, velocity dashboards. Those are all really valuable. Or of course you can talk to Jay and myself, and we can help you to find that dashboard for you as well. Finally, again, if you're my quote for the day, and Jay, this is wasn't really mine, but I'm going to use it anyway. If you're not reviewing your margin monthly, you're guessing, not managing, and that really is definitely true, right? And to some degree, like, you should even be understanding it more granularly than that, right? You don't need to be going and looking at your every single day's transactions or anything like that, but you need to understand how much margin you have on products so that you know how much each sell is really bringing to you.
Yeah, for sure.
Jay, are there any metrics or profitability measures that folks should be thinking about as they're continuing into the holiday season here?
No, I put everything in there for you.
Hey, thanks.
But I just want to say, often tell clients you don't manage your business in the Shopify dashboard. You manage it in your GL, your general ledger software, or in your IMS, your inventory management solution. Those are the places where you manage your business because it has more detail. And, like you said, dashboards are you pull the data out from your sales system, you pull the data out from your inventory system, you pull the data out from your Meta ads, your Google ads, your Google Analytics, and you compare it, you measure it, and you stack it up period over period. And you forecast. Use that information to forecast where you're going, and measure that forecast, how good it was, and that's what makes a business. And
right.
The other thing about these numbers here is gross margin will tell you if your product has legs.
Right.
Contribution margin tells you if your business has legs.
Yeah.
And that's it right there.
So. Yep, and it truly is, right? You mentioned it, right? Lots of sellers try to live in Shopify, want to understand their revenue trends, but it's really a trend of that contribution margin that really is going to tell you whether or not your business is successful. And yeah, that's definitely correct. And the main takeaway from today, right, is that of course that contribution margin per product is getting a little tighter, but there are some things that you can do about it. And we've run through those here, and some ways you can know that that's happening, which we've run through here as well. So in closing, Jay, right, for e-commerce businesses, the biggest expense isn't what you see, it's what you don't measure. Rising costs and shrinking margins are the silent killer of e-commerce. Yep. And so it is important to utilize the tools that are available to make sure that you're not missing that trend. So that's any closing thoughts for today's show, Jay?
Yeah, I gotta say you hit that nail on the head. Most e-commerce owners don't have a profit problem; they have a visibility problem because they can't protect what they're not measuring.
Right.
And that's what it comes down to. You can't measure what you don't track. So Start tracking.
That's right.
And if you're working in the spreadsheets, get into an inventory platform, get into a decent GL, work with a team like Chris and I, and we can give you all those insights and allow you to run your company. We will give you the insights so you can chase down that next ad hack. Because we are doing the legwork for you. So, and that's what it's about. It's like helping you guys achieve the profit and achieve the life that you are looking for. And ultimately, so you could sell that puppy and start a new one.
That's right. Yeah. So if you enjoyed the show today, make sure to subscribe and share it with someone else. If you like the information that we provided, or if there's something that you'd like to add it in the comments. We'd love to see extra people's thoughts. And then don't forget to join us next time as we talk about episode 3 of this cash flow conversation. And that is tackling financing, how to find your growth without drowning in debt. Thanks everyone for joining us for the e-commerce hour today. We look forward to talking to you again soon, and wishing everybody some safe trick-or-treating out there. Don't just take the highs of how much candy you win. Make sure that you're evaluating how valuable that candy was. Snickers bars, not Skittles.
Snickers and Reese's peanut butter cups.
That's right.
Right
Those
there.
are the winners.
Yes.
Yes, sir. Yes, sir.
All right. Happy Halloween, everybody.
Thanks for joining the show.
On to
Bye,
Black
everybody.
Friday. Bye, everybody.
One.